Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 13th, 2024, and we're diving into Cisco's first quarter earnings report for fiscal year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cisco's latest earnings report is quite revealing, especially in terms of how they're navigating the current market dynamics.
Revenue and profitability overview. Let's start with the top line. Cisco reported a revenue of $13.8 billion for Q1 FY 2025, which is a 6% decrease year over year. Despite this, they managed to achieve a GAAP EPS of 68 cents and a non-GAAP EPS of 91. John, what are your thoughts on these figures?
While the revenue decline might raise some eyebrows, it's important to note that Cisco's EPS figures exceeded their guidance range. The non-GAAP EPS of $0.91 is particularly impressive, showing strong profitability despite the revenue dip. This suggests effective cost management and operational efficiencies.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 71 cents for Cisco, based on a survey of 8 analysts. The actual GAAP EPS came in slightly below at 68, but the non-GAAP EPS was significantly higher at 91 cents. How should investors interpret this?
The GAAP EPS falling short of the forecast might be a concern for some, but the non-GAAP EPS of $0.91, which is well above expectations, indicates that Cisco is performing well operationally. This discrepancy often highlights the impact of one-time charges or adjustments that are excluded in non-GAAP calculations.
Strategic initiatives and market position. John, Cisco has reported a 20% year-over-year increase in product orders, with significant growth in their security segment. However, networking revenue is down 23%. How do these figures align with Cisco's strategic initiatives?
Cisco's focus on security and observability is clearly paying off, as evidenced by the 100% increase in security revenue. The decline in networking revenue is a challenge, but their recent acquisitions of DeepFactor and Robust Intelligence suggest a strategic pivot towards strengthening their security and AI capabilities, which are crucial growth areas.
Operational efficiencies and future outlook. Operational efficiency seems to be a strong point for Cisco, with a GAAP gross margin of 65.9% and a non-GAAP gross margin of 69.3%. They also reported a significant increase in cash flow from operations. What does this mean for their future outlook?
These margins indicate that Cisco is managing its costs effectively, which is crucial in maintaining profitability. The robust cash flow of $3.7 billion provides them with the flexibility to invest in growth areas. Their Q2 revenue guidance of $13.75 billion to $13.95 billion suggests cautious optimism, balancing current challenges with strategic opportunities.
Key takeaways. In summary, Cisco's Q1 FY 2025 performance shows resilience in a challenging market, with strong profitability and strategic growth in key areas like security. John, any final thoughts on Cisco's investment prospects?
Cisco's ability to exceed EPS expectations and their strategic focus on high-growth areas like security and AI position them well for future success. Investors should keep an eye on how they leverage these strengths moving forward.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cisco's performance in the comments below.